Understand that because Wall Street is getting into crypto in a much bigger way than ever before, Wall Street can now manipulate the markets in a much bigger way than ever before. In fact, Wall Street might be working with crypto exchanges to keep the price down. At least that's what Fundstrat's Tom Lee thinks. This is what he told CNBC, and he does say, don't worry, these same whales keeping the price down today will be the same ones pushing the price up tomorrow. Tom Lee says that despite this setback, he sees Bitcoin's price being well over $100,000 before the end of the year.
Do you want to, we always get a Bitcoin comment from you before we let you go. Normally it got stuck under 100. That's a pretty, it's a psychological level, I would imagine.
Yeah, I think some of this could be, there's a lot of folks who don't want Bitcoin over 100,000, and some of it may be the exchanges themselves are concerned because there is a pretty low supply of Bitcoin available over the counter. So you have a supply shortage, and if Bitcoin makes a move above 100,000, I think there'd be a big chase. So I'm still confident Bitcoin's going to close much higher before year end.
Before year end?
Before year end, yeah.
So break $100,000 before the end of the year?
Yeah, well above 100,000 before year end. It's just a matter of time.
It's December 2nd.
Do not be fooled. Tom Lee is betting his and his fund, Fundstrat's reputation that the stock market is going to be extremely bullish in December, which will add fuel to the fire of crypto to be extremely bullish in December. Tom Lee lists 4 reasons why he thinks this will happen.
You see 4 reasons why you still expect the S&P to continue to rally in December and maybe to 6,300 by year end. What are the 4 reasons?
Well, one is seasonality. December historically is a strong month, but when you're up more than 10% in the first half and it's an election year, December's been up 100% of the time. The second is yields have moved down to pre-election levels. The 10-year's at 4.1. That's good for multiple expansion. The third is, I think it's been surprising, but sentiment's actually turned negative the last 2 weeks, even as the markets rallied. To me, that's a contrarian bullish signal. And then finally, we still have those 2 puts, the Trump put and the Fed put. And I think that means you still want to buy any of these dips.
Also, there's a big question of Donald Trump. Is Donald Trump really as good for the markets as everybody says? Tom Lee says Donald Trump remains bullish for all markets, and the Trump tariff FUD that the mainstream media keeps perpetuating, Trump's tariffs might be very bad for the economy.